Hello, everybody. Welcome to Gold Trade. So, what do we got today? I got copper, cocoa, crude, cotton, lumber, soybeans, corn, live cattle, sugar. Everything's going up. All agriculture is going up. Commodities are going up. Everything is on the rise. And to me, it seems that the fact that all these are going up and gold and Bitcoin. Uh, that signs that inflation is far from over. And the Fed, they might not have it right. Maybe they should have cut rates. But obviously, if inflation's not over, they're worried about cutting rates, and that's where their dilemma is. It used to be that the bond market used to tell the Fed what to do, but now it seems like the Fed lowered the interest rates to zero, right? So now they're the ones who are calling the shots. Let's see if they know what they're doing. Anyways, let's look at some of these. Let's start with the E-minis, and we'll take it from there. We'll look at a few things that are really interesting in futures markets these days. All right, so here we are, and you're looking at the E-mini, the ES, and the first thing that's jumping out to me is obviously on a weekly graph, you could see how extended everything is. When things are extended, you got to be careful, right? But at the same time, the market is telling us what's going on, and we could see that on a daily graph. And look at this. Ever since October, we have been on a straight upward sloping trend line. If I'm going to draw this trend line, like the 20-day moving average, um, it just nonstop going up. And I keep seeing people's posting, oh, this is the top, this is the top, this is the top. Everyone's right. You can't call the top on a market. You got to wait for indications. What indication do you see in this chart? And the one thing that jumps out to me is that every single time we hit a 13-day average, see this orange line? We are jumping up. Okay. Every single time the future is hitting the 13-day average, we are jumping up. And every time we're hitting the 20-day moving average, we're jumping up. So a trader, he doesn't take huge losses. You're supposed to take small losses, right? So if you're getting in on that average and you're wrong, you got to get out. One of the things that I have learned over the years was that if we're going to hit a certain average, right? Usually what I do is I will take half of my position at the average. If we break that average, I'm going to get out right away. But then if we come back and look, it happened a few times. You see that happened here. We broke that average. Then we went right back up above it. Once we go back up above the average, then I could actually jump back in. That happened to me in Google this month. Google broke a 200-day moving average. I was like, okay, here we go. It's going to be the same story, just like Apple. And then 2 days later, or that same day, if I recall, or the next day, it came back above the 200-day moving average and it held, and then it went up $20. So the same thing with the futures. Whenever I'm coming down to the 13-day moving average, we hit it. If it's breaking it, I'll get out of the position, I'll take my small stop, and then I will go back up. Now, I'm not giving you any recommendations of what to do, okay? You need a stockbroker for that. So I don't recommend, I'm just teaching you. So go along if you could learn something here, enjoy it. So the same thing happened here. You see this, we broke that 13-day moving average. Whoever held on to that position lost, right? They probably got stopped out. And then we hit the 20-day moving average, jump back up here, for instance, we broke the 20-day moving average. So if we're breaking the average, you get out. And then if we're jumping back up, and you could see this day closed above the average. That shows you on the strength, okay? And that's how you could figure it out. Obviously, on an hourly chart or on a 15-minute chart, 5-minute chart, whatever it is that you want. So that's what's going on with the ES. That's what's jumping out at me. Keep that in mind. Okay, what I'm going to jump on now is to the bonds. Okay, I'm going to jump on to bonds, to the 10-year Treasury note. Okay, and the first thing that I'm seeing is I am seeing a triangle. You can see this triangle forming here. You could see more on the daily chart right there every single time. Keep that in mind. Those are great trades if you don't take a large enough of a position and you can actually hold, because what they will do is sometimes they'll go above it. If you could actually hold that. So what happens is that whenever we hit these lines, these trend lines, at the end of the day, if you can get in with a small position, if you caught that trend, you're going to be able to build into it. As you could see here, we fell a lot. Same thing here from the 112s, we fell a lot, and then we keep going back up. So the question is, what's going to happen with this? And what's going to happen with this is what I always like to do is I like to go to the 10-year chart, to the TNX, to the actual interest rates, TNX, which is the kind of the ETF that I like to look at. And you can notice, okay, like here we had a high on February, what was this, February 22nd, right around 43.50. We went back down to support that we had here, and then back up to where? The same area. It's easier for me to look at on the TNX and then to see what's going on in the 10-year. Okay, so you could actually do that, use the TNX to help you, okay, to know when to enter, where is that actual resistance. And you could see that happen here. We were at 113. That was the last resistance here. 113 went all the way down, back up to the 113. And that created also the trend line that we're looking here. And over here, we almost made it. We made it to 113 more or less, even though before that we went to 113.50. So that's what I'm seeing here on the TNX. The RSI is right in smack in the middle, so it's hard to tell what's going on. But don't forget, if the Fed is going to lower the rates, then the price of this bond at the end of the day should continue to go back up, and this trend line that you're seeing here on the daily should continue. So keep this trend line intact on the daily chart, see where that goes. Next thing that's jumping out of me, and one trade already started making sense, is on the Russell. Okay, on the Russell 2000 and the E-mini Russell 2000. What happened here is we had a high here, okay, on March 22. We had a high here. The high was 2137. Okay, and we are now creeping up to that. We hit 2132 and we went back down. I've seen some analysts saying, and a lot of them are talking about the fact that there is a catch-up trade with the small caps and the RSP, which is the equal weighted cap for the S&P 500. If the small caps are going to go up, everyone's thinking they're going up. If they go up, they can go up a lot from what I'm understanding here, all the way up to 3,000. But at the end of the day, this is resistance. Okay, 2130 area is resistance. Until we break it and stay above it, that is a trade. When you hit resistance, you're looking for a short at the end of the day. You think that this is going to go up, and yeah, it looks like it's up on an upward sloping trend line here. Look at this 50-day moving average on a daily. If I would touch this thing, last time I touched it was on the 50-day moving average, because it did hit the 20-day moving average a few times, and it did break it, which kind of got me a little bit upset. But that's what I was talking about with the ES. We could go underneath the average, and then when we come back up, then maybe you could jump on it. So if you're looking to take a long, you're looking at the 50 and the 20-day moving averages. And if you're looking for a short here, you should know this is a major area, okay? But the market is in an uptrend. Bulls are in control, so we could break past above it. Usually we'll break the resistance. We want that. We want to go up. Usually we don't just shoot straight up. We come back down. We test our resistance, see if it's a support level. And then if it is a support level, we continue with that, and that's your buying opportunity if the resistance turns into a support. Moving on to gold, and the last one for today. Maybe we'll do silver and then we'll continue tomorrow. But look at what happened here with gold, right? We came here in 2020, 2100, failed again here in 22, failed again in 23. Now we actually broke this. We broke this in December. We went back up only to be disappointed, back down to the 200 level, to the 2000 level. So what's going on now? Look at this daily graph and see what's happening. First of all, we went into an overbought territory last time this happened, okay? So we are looking now at the last 2 months, okay? Last month we hit this resistance area, and we fell back down right around this 2100 level. So that's what we're looking at, the 2100 level. Here we are with our pink purplish line, okay? 2100 level. We just shot right through it, right? That is what we're doing. So usually what I'll do is I'll just give myself, I'll look for something. I'll look for Fibonacci numbers, or I'll look some support. And what I'm seeing here is that I got support again on the 30-day moving average. And now we are so extended that we're trying to hold here on the 9-day moving average. And I've seen this happening with stocks that are really, really, really strong, and they're holding different moving averages. So, okay, that it would be my next buy whenever single time we hit the 9-day moving average. But if it breaks, I'm out. But at the end of the day, this is really, really strong. It's a major area. Look at this. It took us 4 years to break this area. So is this area going to be support? That is your support. If we're going, look at this. So far, we went all the way down to 2150, 2150, 2160 area. That is the first support. Then the second support will be right around the 50-day. This also comes out to the 50-day moving average. So that is the area of support. And we are looking to continue going with this trend, because who knows what could happen. If I'm seeing stocks fly up to, who knows, crazy valuations, then what could happen with gold and what could happen with Bitcoin? We'll talk about Bitcoin at a different time. But keep in mind with the RSI, what's happening with this RSI. Okay, it's kind of getting extended again. I hate when the RSI gets extended, but I have seen RSIs jump all the way up to in the areas of the 90s. Okay, so that's what the RSI that I like to look at with this gold. And the entry for me, the last entry was I actually bought, when we busted through this area of 2100. But I did get out. I'm looking to get back in. So where am I going to get back in onto this trade? So what I love are my yellow lines, which I put them in pre-monthly. I put them in every single week. I play with them. And these are my areas. If gold will come anywhere near 2160 area, that's my area where I really, really like it, which also comes around to the 13-day moving average. We're going to go with silver. So we're going to make this really short, but I just want you to see on this silver. What's happening in silver every single time is hitting 26 happen. 1, 2, 3, 4. And every single time it hits 22, it keeps ranging. Now, you're looking at months here. So you are in a range between 26 and 22, 25, between 22 and $26 on the silver. There is nothing wrong in learning how to trade the range. Just don't overdo it when you're going in there with your buying. Don't get over leveraged. Just take a small position and play the range until silver is going to figure out a way to break out and stay above that. Obviously, you got to have your stop from 26. You got to be able to have holding power all the way to around 2650, because this happened a few times that it went all the way up to 2650. So that'll be your entry point somewhere around 2575. You're going to have to take a serious stop loss here in order to make money on this thing. But it's trading in a range. All right, last but not least, Bitcoin. People call me when it broke through 69 and they were like, are we buying this thing? It's a 69,000. Maybe it's going to 200,000 like everyone's saying. First thing I did was look at the RSI, and the RSI was really, really high. I said, if anything, you should take a short position here. The only problem is you're going to be over leveraged and you're probably going to get stopped out. So, so you're not going to be able to call top on this thing when it breaks 69. So yeah, you could buy 69 with a trailing stop, and see where it goes. And it went all the way up to 74,000, right? And then we come back in. So what's going on? What are we coming back into? So obviously you're going to have to use your moving averages. And look at this, it broke the 20-day and it went all the way back down, way below that. So all the way down to 61,000. So, and the 20-day was sitting somewhere around the 65,000. So how do you know when to get in on this thing? What I've learned to do on this is I put in some blue lines. They're kind of like my monthly support resistance lines. And whenever it reaches, it gets really, really stretched out to one of these lines. And then I do the same concept that I told you with the moving averages. It will go below that line, will get really, really stretched out, kind of like a rubber band. The minute it comes back above that line, it's going to hold that support. That's when I would jump back in. So that's the only way I really see to play this thing. I haven't seen any trend lines that I could use. I haven't seen any crosses on moving average. I've looked for block trades also, which is something that I usually do in the when I'm trading the E-minis or the SPYs. I'm looking for block trades, clues as to how to trade this thing. I can't really find anything. The only thing I do find is when it gets overextended. So yeah, we're in an uptrend right now in this Bitcoin, just like we are in gold. The question is, how do you enter this thing without getting stopped out? So yeah, I got a buddy of mine. He says he's buying it for the long term. All right, good luck with that. You know, this is a very, very speculative instrument. So to each his own. Hope you enjoy this little video, and I'll see you next time. Have a great week.